Hello everyone, Tim Ittenbach here with Ittenbach Capital. Thanks for tuning in and watching today. I do appreciate it. So today we're going to be talking about recession and what that means for you and your house value and what might be the best option for you at this time. So with that, let's roll that intro. Okay, so I'm going to get just a little technical on you for a moment as we talk about what a recession is. A recession is a macroeconomic term, and it refers to a significant decline in general economic activity, or two or more consecutive quarters of decline in our GDP, or what we call our gross domestic product. GDP is the total value of all finished goods and service produced in a specific period of time. So usually measured in years or in quarters of the year, quarter 1, 2, 3, and 4. Right now they're predicting that third quarter GDP will be down 30%. That's 30% as a result of this pandemic and recession. And I say that stinks and it affects all Americans negatively. They're difficult to predict and they're very difficult to prepare for. Now, I want to say here I'm not an economist. I do have a master's degree in business, but I'm speaking more from a personal experience, both in my life and investing in general. Now, it seems that recession is on the minds of many these days. If you've got a 401k or an IRA, you've probably seen a significant drop in value in a very short period of time. These types of shifts in value are easy to track, given access to historical data and charts in real time. What's a little less tangible and more difficult to determine is the value of your home in a downturn economy. When a recession happens, it affects markets all across the country differently. Some areas see a greater depreciation in home value than others. The same holds true with recovery. Some areas just recover faster than others do. It's important here to know you shouldn't panic. We had the Great Depression in 1929 and America recovered. We had the stock market crash in the 1980s and we recovered. We had a great recession in 2008 and 2009 and we recovered. We will recover from this recession and this pandemic together. In America, we have a recession every 7 to 10 years. It's a normal cycle. If you look at the last recession in 2008 and 2009, and now it's 2020, we're long overdue for a market correction. Now, current fears about recession are fueled by foreign oil trade wars, a new election cycle with the 2020 election, and of course the outbreak of the coronavirus and COVID-19. Major stock market declines and falling home values may be much sharper given these circumstances. Now, generally, consumer-led recessions are typically consumer-led recoveries. This is because these declines are largely consumer-led by emotions, fears, and anxieties. Now, once we consumers feel more comfortable about the economic future, the economy returns to normal. These times are a little different. We have both consumer fears, anxieties negatively impacting our economy, but we also have external forces. These oil wars overseas, which are affecting our energy sectors, and COVID-19 and the coronavirus, which is decimating our retail markets as well as travel and tourism industries. So the combination of these two mean it's going to be a difficult time for everybody for a period of time. Now, if a recession is looming or if we're in a recession now, again, it's not time to panic, but you should take this opportunity to get your financial affairs in order. Let's cut any unnecessary financial expenses. Take a look at where your cash is going. Do you really need that subscription or that product or that service? If you've got the cash available to pay down any debts, so you're not paying high interest rates on credit cards or lines of credit, do so. Now, this is always good practice, but especially in times of economic turmoil. If you don't already, you should know just how liquid you are. Now, this means how much cash you have on hand just in case. So let's start talking about recession or the impending recession. In this video, we're going to talk about how the impact a recession will have on your home's value, the silver lining of a recession, strategies for selling your house fast if you need to, as well as discussing whether or not it's a good time to sell. If this kind of information is interesting to you, hit the subscribe button below and be on the lookout for future content. So, if you're a homeowner and you're thinking about selling your house, or maybe you're in a position you have to sell your house fast and time just isn't on your side, you might be asking yourself if now is the right time to sell. When the news media and financial pundits start talking about a recession, it tends to worry most people. We tend to get cautionary with our spending, we put budgets in place, and perhaps put off any big purchases or that awesome vacation we were planning. We start to worry about the long-term viability of our current jobs and what savings or emergency funds we have available in case the worst should happen. Now, no one likes a recession, but there are some benefits, and I know that sounds crazy, but in a recession, government typically lowers interest rates in order to spur economic activity and lessen the overall impact of a recession. So if you are a homeowner and you aren't planning on selling your house now, it may be a great time to consider refinancing your home. If you can lower your interest rate by at least 1%, if not more, then it is definitely worth the effort and the expense of refinancing your home. This will save you thousands of dollars over the life of your mortgage. Now, if you're planning on moving in the next year or two, refinancing may not be the best choice given the costs you're going to incur for that loan. It ends up being a break even. Okay, so let's spend a little time talking about the value of real estate these days. Before all this happened, we were seeing peak prices in housing. This did vary a little bit based on the condition of the property as well as across different markets. So whether your house is in move-in ready condition or it needs a little TLC, we were seeing higher prices today than we did 10 years ago. And despite an ever increasing number of available condos and townhouses being built, we're even seeing prices rebound in that sector as well. Sellers with move-in ready houses, ones that have been completely remodeled and reflect current trends and consumer tastes, they're the houses that were getting top dollar. Now, if you're thinking about selling your house and want to take advantage of a hot market, but your house is in less than move-in ready condition or has major repairs on the horizon, you need to be realistic about the value of your home. And whether you sell it direct to a real estate investor like Ittenbach Capital or list it with a real estate agent, you will have to deduct the cost of those repairs as well as the effort to make those repairs. So if your house needs major repairs or it's stuck in the 70s, it's not likely going to get peak pricing, especially during times like this. You'll have to discount the sale of the property in order to allow room for the new buyers or investors to put those additional funds in place for the remodel. Now, if you find yourself in an unfortunate position where you have to sell your house for whatever reason and time is not on your side, your options may be limited. So during a recession, should you consider selling your house? That's the big question. If you want to take advantage of peak pricing as they stand today, now is the best time to sell. The longer a recession drags out, the greater the decline in home values. If you're facing financial difficulties and have a house that needs some work, selling now will get you the highest price for that property. In an earlier video, I talked about time and condition as two variables to consider whether or not to sell your house, as well as the variables real estate investors consider when buying a property. Now, only two variables change in the perspective of a real estate investor, and this is the purchase price and the sell price. Rehab costs remain fairly constant throughout a recession. The cost of remodeling a kitchen or painting a house or installing new carpet or a new roof, for the most part, all cost the same whether we're in a recession or not. And what that means is the more an investor can sell your house for, the more they can pay you for your house. Both of these variables, the purchase price and the sales price, they rise and fall equally. Now, the longer this recession drags out, the lower both of those numbers will continue to drop. Now, if you've got time and can weather the storm and hold on to your house, eventually values will return as they always have, and you can sell your house when the time is right for you. Now, other factors to consider is whether or not you're close to retirement or you have major financial obligations on the horizon, like college or medical bills, or even if you're transitioning into long-term care, whether it's yourself or a loved one. Selling your house and getting the most amount of money for it today is better than selling it 1, 2, or 3 years from now if we're in a long-term recession. So let's talk about selling direct for a minute. Selling direct simply means selling your house direct to a buyer and bypassing any middlemen, or in this case, real estate brokers. This process tends to be a faster, more convenient alternative to listing your house with an agent. Selling houses direct is becoming more and more popular. Homeowners are selling their houses direct and doing so for a number of reasons. Some homeowners simply don't want to deal with all the hassle associated with selling your house with an agent. This process often takes longer than 3, 4, 5, 6 months. Commissions can quickly erode the equity in your house and the money in your pocket. You will have to spend money cleaning up your house and making repairs, as well as possibly staging your house for showings. Others decide to sell their house direct because they're out of time. Some are either facing financial difficulties, or they're relocating to a new state for a job, or facing any other life event that is forcing them to sell their house now. Other folks inherit homes and don't know what to do with them. Some have houses that are in a state of disrepair, and either they don't have the resources, the expertise, or even the desire to tackle a home remodel or bear that burden. Now, if you decide that selling direct is the best option for you, you need to take the time to pick the right company to work with. If you go on our website, we have a free e-download that talks about winning strategies when working with a real estate investor. So go online at ittenbachcapital.com, download that free e-guide. This guide goes into greater detail about selling direct and those winning strategies. You can find our ebook for download on our company section of our website. It's at the very top. You'll see our company link. Click on that, scroll to the bottom, and download the ebook. It's free. So if you have to sell your house fast, and I mean yesterday, a cash option might be the best option for you. Working with an investor and selling your house direct usually only takes a week or two and puts cash in your pocket when you need it. At Ittenbach Capital, despite current times, we'll be happy to assess your home and its current condition and provide you with a fair market cash offer. If your house does need repairs or updates and you're wanting to tackle those projects yourself, we can provide guidance as far as what repairs and updates you should focus on that will drive the greatest value. Okay, so getting back to a possible recession if we're not in one already. Although there are some areas across the country that have not yet regained value lost in the Great Recession in 2008 and 2009, many parts of the country, and central Indiana in particular, have not only regained value lost, but have actually improved since the previous recession. So if you're thinking about selling your house and you've got a lot of equity that you don't want to lose, when the market turns, now may be the best time to sell your house. The only caveat being when you sell that house, you're going to buy a new house and you're likely going to be paying prices that are premium as well. So if you can swing it, selling your house today for a premium price and then renting a house for the next 18 to 24 months will put you in a great position to buy your next house at a discount once the market corrects. If you have a house that's in some state of disrepair, or in the near future you're likely going to have to sell your house quickly, now might be the best time to reach out and talk to a real estate investor. Again, as the value of housing declines, so will an investor's ability to pay a higher price. Not desire, but ability to pay a higher price for your house. Something else to consider. The value of your house is more than just its address. It's the street it sits on, the neighborhood, and the community. I have a saying, I can fix a house, but I can't fix a street. And what this means is I can make a house beautiful, but if the rest of the neighborhood is in bad shape, it will limit how much I can sell that house for. The reason I mention this is it directly relates to home value volatility. If you're in a popular neighborhood, you're likely to see less of a decline or volatility in your home's value in a recession or economic turmoil than if you were in a less popular neighborhood or a neighborhood that is in rough shape. So just a quick recap. The only variables that change are the purchase price and the sell price of a house. What remains constant are the rehab costs. So your house value is directly linked to consumer demand for housing, the neighborhood in which your house is located in, and this includes school systems, access to entertainment, restaurants, shopping. With economic certainty and possible recession upon us, now is a great time to evaluate your situation. We can help you with that. So if you're thinking about selling your house or have questions about what you should and shouldn't do during this time, give us a call. We'd be more than happy to discuss your unique situation, share our years of experience, and provide guidance to put you on a path that's right for you. Now, I'd like to leave you with this. We are here to help. We are not here to take advantage of the situation, but to help homeowners solve problems and alleviate the stress and pain that goes along with real estate challenges. We want to bring more humanity to this situation. That's where we truly feel we add the greatest value for our clients. Give us a call today so that we can craft a plan and a solution, so we can put one in place and be ready to execute that plan when we're on the other side of this pandemic and the stay-at-home orders are lifted. We can conduct a virtual meeting so we can speak face-to-face and take a tour of your home remotely. Our entire process from initial contact to close can be completed remotely. Let's not wait until the pandemic is over or the recession is over to put a plan in place. Rather, let us have a plan in place that we can execute the moment we're on the other side of this. By doing so, by having a plan ready to execute, this economic downturn, this pandemic won't last any longer than it needs to. Waiting to start making plans when we're on the other side of this thing is only going to delay the impact it's going to have on you and your family and the value of your home. Thanks again for watching. I appreciate it. Feel free to send me some questions. I'd be happy to answer them. And as always, I look forward to seeing you on our next video. Thank you and take care of each other.